US Federal Reserve Chief Janet Yellen late on Thursday almost made sure that her counterpart in India, Raghuram Rajan, the RBI governor, gets the leeway to cut rates in his next policy review meeting later in the month. On Thursday night, the US Fed chief decided to keep interest rates in the world's largest economy unchanged. Indian fund managers and economists see this decision as another enabling factor for RBI to cut rates, which could give some more boost to the Indian economy that is again showing signs of stagnation. For the equity market, the immediate trend decider would be how the global markets react to the US rate decision, they said. The US Fed's decision to not increase rates is positive for interest rates in India, which are now expected to come down, said S. Narain, Chief Investment Officer, ICICI Prudential Mutual Fund. And as for Indian equities, they continue to be attractive for long-term investments in the light of continuing redemptions in the emerging market, Narain told TOI soon after the US Fed decision was announced on Thursday night. Going by the tone of the US Fed's language in the press release, fund managers said even a rate hike in December seems to be uncertain. In case of a rate hike, there was a chance of FIIs taking money off emerging markets, including from India, which are considered risky investments by global investors. With Yellen deciding not to hike rate, which could otherwise have been the first such decision in nearly a decade, FIIs are expected to keep faith in the Indian stock market for the next few months, market players said. However, Yellen said a rate hike is still likely this year. The majority of Fed officials on the committee setting the federal funds rate still see higher rates coming before 2016. Every meeting is a live meeting, Yellen said. Earlier in the day, FM Arun Jaitley told investors that steps were being taken by the government to bolster the economy and deal with financial market turmoil, which his junior minister Jayant Sinha said there were enough layers of defense to cushion the impact from any shock from a possible increase in US interest rate. Economists also said the fundamentals of the country were in a much better shape to deal with any possible shock.